Hi, and welcome to CoinToss, the show where we respectfully and often vehemently disagree about the big questions within our modern, financialized, and increasingly tokenized world. I'm Adam B. Levine, managing editor of CoinDesk, managing editor of podcasts at CoinDesk, and your moderator. Today, we'll dig into two big questions in the world of crypto. First, is Bitcoin in a bubble? And then later on in the program, we'll talk about the troubled top stablecoin Tether and whether it's finally in the clear. For today's discussion, we're honored to be joined by two longtime veterans of the Bitcoin space, Tim Swanson, head of market intelligence at Clearmatics. Tim, thanks for being here.
Great to be here.
And Trace Mayer, a host of the Bitcoin Knowledge Podcast. Hi, Trace.
Hey, glad to see you, Adam.
Yeah, good to see you too. It's been a while. So I think by any standard, Bitcoin has had a wild 12 months, from the early days of the pandemic when it crashed alongside global markets all the way down to $3,500 per token, to the exponential ramp that's taken prices more recently above $50,000 each. Even Elon Musk seems to think the prices are high. Yet if you look at past cycles in percentage terms, it seems like maybe we're just getting started. So the question goes to you first, Trace. Is Bitcoin in a bubble?
No, I don't think Bitcoin's in a bubble because it's equity-based. It might be a little overvalued currently. If you look at the Mayer multiple, for example, it's at about 2.3. And so historically, that ratio has only traded higher about 10% of the time. Personally, I like to buy when it's a very low Mayer multiple, between like 0.4 and 0.9. But, you know, we have a lot of things that have changed in the last year. We've had a pandemic. Who knows how that's going to play out over the coming decades? We've had 40% of all U.S. dollars that have been created have happened in, the last 8 months or so. Who knows how that liquidity is going to flow into stuff? When you look at Chinese banking deposits and whatnot, the Chinese have a lot of extra capital over there. And at the end of the day, you want stuff that they can't print and that they can't see because they're going to print and they're going to take whatever they want. Janet Yellen has already talked about unrealized capital gains taxes, and we've got lots of big budget deficits, unrestrained government spending, and Bitcoin stands there with 21 million as a supply, right? And as a new asset class. So we're seeing the birthing of a new asset class that just passed $1 trillion market cap. A lot of the big institutional players, that sixth network effect of financialization, they can't allocate capital into something that's small and tiny. So now that we've passed that $1 trillion market cap, I think we can see a lot more action from other players.
So, Tim, you've long been sort of a skeptic in the space who's pretty familiar with the technology and, doesn't have like a fundamental misunderstanding of like the way that this stuff works. So talk to me from the other side. Kind of what's the argument against Bitcoin's sustainability at these prices in your view?
Well, according to the Swanson multiple, which is 22. Sorry, just make a dig on that. And I only tweet when it's negative. So I tweet FUD, obviously, when it goes negative. So I get asked to talk about bubbles and things like that. Like if we look at correlations, which people like for whatever reason, it seems like a pretty reflexive asset, hyperflexive asset, highly correlated to NASDAQ's tech sector. Basically, like if you just take a highly leveraged version of QQQ, it's basically is up and down all day like that, at least the past couple of years. And even the past year with the S&P 500, it's pretty correlated to that. Again, that aside, we could talk all day long about the motivations of who's buying or who's not buying. So like, for example, with corporates, if you look at MicroStrategy, their company was in the doldrums like for a decade plus. And then for whatever reason, the CEO decided to plow some of the shareholder value, in this case, the balance sheet of a company, instead of investing in productive assets, he bought something that's effectively the same thing as a mountain of coal that he burned in China. Same thing with Tesla. The hype around that. Tesla basically sold $1.5 billion worth of tax credits this last year, and was able to buy instead of spending that on, again, productive capacity for, say, batteries, he went out and bought effectively the digitized form of burnt coal. So we could argue about what the motivations for different governments are. If you want, happy to do that. I have a couple notes of written down, but I'll pause there.
Well, so let's take this. Let's kind of stay focused on the corporate strategy there, because on the one hand, Trace is saying that there are certain sizes, notably $1 trillion sort of asset valuation, that are required before you see participation from these larger players, and now we've kind of hit that. On the other side, certainly it seems that your point, Tim, is well made, which is that this is not the core business of any of these businesses that are actually getting into it. So kind of what are they saying about their own business models? Trace, let's go to you for a second. Just kind of respond to all of that. And as far as the corporate thing goes, is this a good trend that, like play it out, a year, 10 years, whatever? Like, what does this mean?
Well, first, any CEO's job first and primarily is capital allocation. Their business model comes second to that. If you've read the book The Outsiders by Harvard Business Review, they look at the top performing shareholders in terms of ROI. And Buffett, Catherine Graham, Teledyne Continental, you look at all the top performing CEOs in terms of ROI, and what they found is that those who were good at capital allocation, excellent at capital allocation, even if they had mediocre businesses, kind of like MicroStrategy is just a mediocre business. But what they did is they innovated creatively with capital allocation and made good choices there. And they also innovated usually with some type of tax policy like depreciation or whatnot. And that resulted in outsized gains for those CEOs. And so I would argue that the first and primary duty of the CEO is capital allocation. And if that means that you have a Berkshire Hathaway and you have to smoke the remaining puffs on the cigarette butt and then reallocate into other things like Geico and See's Candy, and then take that positive cash flow and move into other assets and productive businesses like BNSF, that is what makes a good CEO. And what we've seen with Bitcoin is it's a new form of asset. This is a new asset class. It's limited in amount. It's sound money. So if London is like gold, Satoshi discovered the trade winds like Columbus to the New World, and Bitcoin is like New York, where all the productive capacity that we build out this continent is going to flow through. And then you have places like Chicago, which would be like Ethereum. You've got Monero out there in Kansas City or St. Louis on the Wild West. And we have still probably undiscovered the San Francisco of digital currency. And so because there's always innovation, I had dinner with Nick Szabo about this, and monetary evolution is always incremental. And so what Michael Saylor has done is he's executed brilliantly in terms of a capital allocation standpoint. If you can borrow dollars and at 75 basis points or even 0 basis points and have it as convertible debt and then buy Bitcoin, that might be a good use of his balance sheet. Now, me personally, I don't like debt. I don't do debt at all. And so I don't really agree with that. I don't really like to invest in companies that have large amounts of debt, but all the power to him. And if he wants to build out the first and the sixth network effects that way, it's just, you can't get into a position that you can't get out of. That would be an unwise thing to do unless you just want to hold that position like the Mona Lisa or whatever. And so, if he's committed to holding Bitcoin over a long period of time and his investors want to do that and they want to give him convertible debt at 0% interest, it's wild. And look at his stock price. Look what's happened to the stock price. And so every corporate treasurer should be looking and formulating a sound money, monetary repression, high liquidity environment type of strategy for their capital allocation. And if they don't, look at what happened in Weimar Germany. We had the exact same type of stuff with some of the German industrialists during the Weimar inflation. They would borrow Reichmarks and then they would pay off with Reichmarks that had gone down in value. And so personally, I like to filter out all the daily noise using the 200-day moving average. And I like to have a firm foundation in terms of how the capital is allocated. And that includes gold, it includes Bitcoin, it includes dollars, it includes real estate, it includes farmland, it includes stocks, it includes all types of different things. And it includes private businesses, and it includes like startup businesses. And so, this is all part of the capital allocation strategy. And we have cycles, and stuff goes up and stuff goes down. And that's the first speculation network effect. And it's wonderful. And that means that things get overvalued. Price is what you pay, value is what you get. And so what should be happening is you should be buying stuff when it's cheap and selling stuff when it's expensive. And that's the only part I kind of take issue with the corporate adoption right now, is that they're buying at high Mayer multiples. Why don't they just sell puts instead on Bitcoin? Like, it'd be much easier.
Hang on,
sell.
Trace. Let's get Tim in here. Tim, I see you. I see you wanting to jump in. Go ahead and do that. Respond to Trace, please.
I mean, there's like 27 different things right there. And again, I know we only have still little time, but like, come on, there's no hyperinflation. This is like a meme that just won't die. Like, we're not facing some kind of 1920s era, collapse of a German republic. That's not happening. Issues right now in the U.S. and so forth, but by any measure, we don't have more than 1, 2, maybe 3% for core inflation in a given quarter or year. It's actually the Federal Reserve would like inflation to go higher, and they can't because for all sorts of different things. So, there may be reasons to buy Bitcoin. We could spend a whole couple of days talking about that. I don't think from going back to corporate, like if every single corporation followed in the footsteps like MicroStrategy or Tesla, like we would end up in a society in which there's no one actually producing goods and services that beyond servicing the maintenance of Bitcoin mining machines. Like, it's just that slippery slope. It doesn't make any sense. Like, we should be advocating the good corporate governance and fiduciary duties around not only shareholder value, but like why should large corporations with huge balance sheets go out and buy an unproductive asset that only is going up and down because you have effectively Keynesian beauty contests or animal spirits taking place? Like, I don't know what the right multiple would be to buy anything, but like this is all completely arbitrary. Like, next question, please.
Well, so let's kind of follow that for a second, Tim. You alluded to it, but I think we can just say it. Like, reality, as far as we measure it through official measures, doesn't really measure reality anymore. It measures kind of like a sort of rough impressionist painting of reality that we think benefits us politically. So, I mean, like, in a world like that, it seems like maybe Bitcoin isn't that different from all of these other assets. It's just sort of something else that falls under the pressures of, monetary policy. So, I mean, would you agree with that, or kind of what's your read on Bitcoin relative to traditional markets in the modern era?
Like, you have an asset, or whatever you want to call it, a coin, something cyber, something digital, whatever, that is, in order to create it, you have to effectively burn something on the other end. And in this case, there's like a direct relationship between the value of that token or coin and the amount of energy that is effectively consumed to create that. So in a world in which you have like $1 million Bitcoin, you end up basically a net drag on all of society, because you increase effectively like the energy consumption of you basically add a U.S. size energy footprint without actually having a U.S. sized GDP output. So we don't have enough time to go through all these debates. But I'm not saying don't buy Bitcoin or sell Bitcoin right now, but the arguments for buying Bitcoin because people are scared that central banks are printing money, it's just like, number one, central banks aren't doing that. Like, you have fiscal policy taking place through different governments, but like all of this is just
we'll bring you back for another.
You and I have known each other for 7 years, and these are the same exact memes that people push to get people to buy their coins.
Well, there's one other meme that's a little bit new. We're almost at the end of this block, or we're almost at the end of this discussion topic. But real quickly, 30 seconds to each of you. Have you heard of Dan Held's supercycle theory, which basically says that this time is different, and although prices will go up, they will not go back down? 30 seconds. Tim, let's start with you. What do you think?
It's just arbitrary nonsense. That's how I would close it. Just arbitrary nonsense.
Okay.
So you can sit here and go through each bit piece if you want.
Okay, sounds good. Trace, do you think there's any validity to it?
Well, when you're looking at the prices, you have two main constituents. You have the holders of last resort, and then you have the buyers of last resort. And you have mining emission with proof of work blockchains that require electricity to go to money, dollars or whatnot, to go to the electricity company. And so that acts as a natural governor on the price of the coins. And so, like, yeah, I mean, it could go up, but that's why I like the Mayer multiple, 200-day moving average, and look at it over a rolling period of time. It filters out all the daily noise. we're talking, look at gold. Gold's gone up and down through thousands and thousands of years. It's just the nature of an asset where you have speculation network effect.